Well, thank you very much for that wonderful introduction and a reminder, it's really the 1.4 billion people here that this stage has been focused on this afternoon and that this panel will be focused on. Over the past decade, we've made amazing strides, I think, using technology and innovation to address financial inclusion challenges, but many of them remain. This morning, Ravi Menon reminded us that it's not just those who might naturally leap to mind, but also thinking about the aging and the disabled and others in society who really need to be fully included with products and services that are focused for them. And I think that that's really the challenge with inclusion, is making sure that we can find those products and services that are really needed and valued. The most recent Findex highlighted that great progress that has been made in opening up access to accounts, but again, the usage of those accounts is something that lags, and I think that's what we're really going to dig into today, is what are those remaining hurdles, what's standing in the way of having these individuals fully integrated and included into the economy. And it's not just because these individuals we want included, but it's that they're engaged in a lot of economic activity. So this is really also about unlocking value and potential in the economy more broadly. So with that, I thought that we would start with the first theme, really just to look at, what does inclusion mean and why is it so important? So just to give a little bit of a view from your institution and your role of why that's important. So Burkhard, if you could start us off with the central bank perspective, how do you view inclusion and what's at stake for citizens and the economy?
Well, thank you, Conan, for that question. Financial inclusion is without doubt an important, very important topic, I would say. It is thought to be conducive and conducive to promoting the economic growth and lowering inequality. And in general, I would also like to add that financially included people are definitely in better positions to start and also to develop businesses. I think this is really a key issue. Also, then they are better prepared to invest in their children's education, also to manage risks, and then finally also to absorb financial shocks. I think this is also worth to mention. So from a central bank's perspective, I think there are three main takeaways. First, increased financial inclusion facilitates consumption smoothing, as households have easy access to instruments for saving and for borrowing issues, and this may facilitate central banks' efforts to maintain price stability, an issue which is more than ever important, especially also in Europe at this time. And then second, the growing financial inclusion is likely to increase the importance of interest rates in monetary transmission, as a greater share of economic activity comes under the sway of interest rates. And as I said, three main takeaways. The third one is, while financial inclusion should be beneficial for financial stability, improved financial access could also entail new risks, and expanding access to financial services here, especially to credit, at too fast a pace and with too little control, exposes economies to stability risks and households to the risk of over-indebtedness.
Well, Burkhard, thank you so much for sharing that macro view of why this is such an important topic, what's at stake for the economy, and why we're focused on this. And I think maybe let's, for this opening question, just keep going down the roll. And Matthew, maybe if you could highlight what inclusion means for individuals, enterprises, small businesses, families.
Sure, and I think you got your fingers on some of the key issues in your opening remarks, Conan, because look, my background is in supporting small businesses. The funny thing was, when I was asked by IFC several years ago to focus only on small businesses, and I would go to meetings on financial inclusion, even a few years ago, people would tell me, well, why are you here? We're doing inclusion. That's not about businesses. And as you just heard, I mean, my answer was, huh? Why are we including people with finance? Finance by itself is maybe at best an oil for a machine. But unless finance creates jobs, unless finance improves livelihoods, unless finance opens doors for people to have more opportunity to raise themselves up, then it's not inclusion, it's just ticking a box that they have an account, as you said. And so to me, inclusion is about that value, as you put it, that finance is actually helping to move people, to move countries forward.
Wolfram, how do you see inclusion?
Well, I bring in a tech perspective since I'm coming from a security tech company engaging in currency technology, which basically for a long time was cash. And cash today is inclusive, but the world becomes digital. So we need to maintain the mandates that central banks have in providing cash to the entire society, not with a profit interest, but with public interest, and ensure that this value that cash brings to society also is there in the digital age. And that is where I think the debate that is around CBDC is adding a lot of value to driving financial inclusion from that perspective, since it can address multiple barriers that we see today in financial inclusion. And that's not only technical barriers, but this starts even with financial education. It has multiple dimensions that we want to address here.
Excellent. And Fernanda, I think a lot of the world, when you say financial inclusion, people's minds might go to a way to store value or access to credit. But what's that broader spectrum of needs that you see in the economy when you think about inclusion?
Exactly, and then you pointed out for 1.4 without bank accounts, but there are so much more that is required. So we calculate, so at LeapFrog, our main focus is really to have our portfolio companies serving 4 billion people in the world who don't have access to what we call in LeapFrog speak safety nets and springboards for this family, emerging consumers that make up to $12 a day per capita in the family, to basically be less vulnerable and progressing life, right? If you think about this level of income, they are much more vulnerable for economic shocks, vulnerable to climate shocks. And so thinking about that segment and preparing them to be less vulnerable and progressing life requires a lot more than just credit and a bank account. So the way we invest is primarily like 4 buckets, I would say. So in financial services, a safety net product could be an insurance, for example. So in financial services, we look at insurance, credit, payments, healthcare. Is a very important safety net product. And then climate solutions. If you think about inclusion, and financial services almost always permeates a lot of other industries, emerging consumers and families will not be able to afford, for example, solar panels if these are not financed, right? So actually, some of these products actually reinforce each other, but inclusion is much broader than just credit or a bank account.
Excellent. And for the next theme, I thought we'd look at these new technology developments that are driving so much promise, opportunity, have had a lot of impact already. But what's the role of digital transformation, and how can they overcome some of these challenges and hurdles that we've been talking about? And Burkhard, I thought we'd come to you first for the view that you might have on digitization of the economy more broadly. How do we support that transition to digital platforms in society to make sure that everybody's included in that transition? And what's the role that you see potentially for CBDC or other tokenization and ledger solutions? So Burkhard, we'll start with you on this.
Well, from an economic point of view, digital finance, of course, can deliver a wealth of benefits. First of all, digital financial service can bring about really significant efficiency gains. That is a point I want to mention first. And then digitalization can also stir competition within the financial system and raise then the contestability of the financial markets as such. So some commentators even argue that digitalization has the potential to revolutionize financial services and also the infrastructure around. In general, digital finance facilitates the access to financial services. And from my point of view, this benefit is not only confined to tech-savvy consumers in advanced economies. Indeed, digital technologies can be key drivers of financial inclusion in less developed countries too. We have seen already many examples. For me, it is also clear that digitalization of the economy provides both challenges and opportunities. So central banks should ensure that they have the capacity to continue to meet the policy objectives in a digital age. And therefore, many of us, many central banks, also the MAS here in Singapore, we are evaluating the opportunities and challenges associated with the introduction of central bank digital currencies. We have at the moment more than 135 of specific projects from central banks or within currency zones on that. So I would say that moreover, CBDCs also may have the potential to bank large unbanked populations and boost financial inclusion, which can increase the overall lending and reduce banking disintermediation risks. So at the end, CBDC issues can increase bank deposits from the previously unbanked by intensifying the opening of bank accounts for access to CBDC wallets. And lastly, my last point, data from CBDC usage allows for the building of credit to reduce credit risk information asymmetry of lending.
Well, Wolfram, as a firm that has provided a lot of the technology and focused on currency and trading and addressing many of the challenges that Burkhard set out as the policy objective for CBDC, when you look at CBDC initiatives around the world, what do you see as the problems that central banks are working to solve?
Well, we are in fantastic times. We don't only see technology evolving fast, but we also have the opportunity to design the future of payment and the future of money. And in my opinion, CBDC can drive the digital economy. CBDC is a platform. It's not a payment scheme. It's not a new product that's brought to consumers, but it's a platform offered by the central bank as public infrastructure that allows businesses to develop new products and services. And when I say businesses, I include the financial industry, of course. Not only commercial banks, but also fintechs, who are eager to develop new business models, but who face a fragmentation of the market and of the technologies right now. If I would ask 10 people of you to find a common ground of digital payments, how you can exchange, most probably that wouldn't work today. Because in digital payment, standardization is not there yet. And here, CBDC can provide tremendous benefits. And we experienced that in various pilot projects around the globe that address the broad range of variety of use cases, from person-to-person payment in rural offline environments to smart contracts execution in fintech environments, based on the same platform, which allows the provider of these products and services to reduce their costs of operation and to reduce their time to market and come up with new offerings. So here we see a lot of potential that is driving the digital economy.
And a good list of those solutions that could address some of those longstanding barriers that we've had to inclusion. So again, a lot of hope and expectation that these technologies will change the equation and the economics for inclusion.
Can I add one aspect? Because you may ask me, how exactly does CBDC drive financial inclusion? And we have experienced that in these rural off-grid environments where typically there's not enough banking infrastructure, there's even no communications infrastructure, but there are people. And To bring them on board, CBDC can be a tool. It can be the on-ramp to financial inclusion. Since the instrument that is issued by the central bank needs a wallet to transact with, which could be issued by a commercial bank. And for basic features and functions, services are for free. So there needs to be an arrangement, of course, in the financial system. But by giving consent, the consumer can allow the commercial bank to start gathering a digital footprint of the person. And with that, they can bring them into micro credits and into additional products that the banking sector is offering to the unbanked.
And of course, sorry, Matthew.
I'm a big fan of central bank digital currencies, and I feel that they have huge potential. But I want to just enlarge this discussion a bit, because I would say, especially thinking about it from the small business and small farmer and rural people's perspective, that any digital technology that accelerates, that facilitates the movement from doing cash transactions to doing electronic money transactions, and technologies that facilitate your commercial, whether it's your contracts, whether it's learning about how goods are moving from farm to fork, any technology that helps create digital footprints for that is really good for inclusion. And so CBDCs are one, but as you see at this festival, there's a whole host of technologies, CBDCs being great, but there are also others that are really, really important.
And maybe do you want, or I'm sorry, Burkhard.
He's absolutely right. And of course, that we are promoting and speaking in favor of CBDCs is absolutely clear as representatives of central banks. But we are also, of course, very open for private solutions. And this festival is, in my view, a very good example, one of the best globally, to see the different solutions that we could offer in the financial hemisphere together.
And I think one of those things that will be essential to achieving the potential for inclusion is, careful, thoughtful design, and that design and requirements process, including the public and private sector, so that you're leveraging, those capabilities that make sense. You're not creating fragmented liquidity or pools that are somehow not connected well to other existing systems, and then seeing how they connect up. Burkhard, earlier in your comments, there had been, I think, some hint of the cross-border payments, fast payment systems, linking fast payment systems, and that's certainly been an interesting story and a great success in the past couple of years, particularly in this region where you saw those linkages, and expect these different spheres of innovation to hopefully be better connected in the future. But that, of course, is one of the challenges, is as we try to push and rush to adapt and adopt these technologies for inclusion purposes, making sure that we don't create fragmented pools that are left out of broader connections. Matthew, did you have any other technologies that you wanted to highlight? Or
I was going to just, especially to bring Fernanda in, I was going to give an agricultural insurance example, right? Farmers are among the most difficult people to figure out how to finance, because there's they're way far away. So it's expensive to go and physically check out what's going on. Plus, things happen to farmers more than to other people, and even good farmers, right? But if we have satellites in the air who have digital feeds to us about what's going on their farms, or now drones that can do this at low levels and have more, and if we have real-time information from the farmers' cell phones about where they are moving around, so that we see who's tending the farm and who's scatting all about and not paying attention to the fields. I mean, some of this may create some big brother fears, but I assure you, if you talk to small farmers in Africa and Southeast Asia, and you say, I need to be able to have this digital connection to you because I want to insure you, I want to give you agricultural credit, they will take this trade-off.
And you say there are fears, but as you said, as long as that compelling story of what the value is there and what the trade-off is, I think adoption can really succeed. And you're right, that's exactly where we wanted to go next with Fernanda, was examples of where tech is driving affordability and where it's helping to change the model for distribution.
Yeah, we see this across all the sectors we invest behind, financial services, healthcare. In financial services, I mean, there are several examples. So if you look at those frameworks for the first bucket in payments, right? One of our investments from Fund 3 was in a global remittance platform. So obviously, a migrant from Somalia setting up in London, creating their digital remittance platform at a fraction of the cost of Western Union, right? Really disrupting that market using technology, obviously also less infrastructure. So through apps, through licenses that were given by the central banks, Ishmael managed to create World Remit Zaps now. Insurance, right? We have actually a couple of our investees here completely transformed the model of distribution of insurance, not really reliant only on a very expensive agency force, but actually embedding insurance, making it contextual, relevant, affordable to a wide range of people in our society. Credit, obviously, it's a big one too, and not only to actually gather this information and do better underwriting and be able to push down, but actually in acquiring clients, right? We saw even in the microfinance institutions that actually we invested together, completely transforming with technology. Today I was talking to a few of them, cost of acquisition of a client became $1 or less than that, right? Where in any bank will be 100 times that. So technology definitely bringing affordability and actually passing that to the client, right? So if you are to remit through a digital platform, you will pay a fraction. A cost of funds, now it's much more competitive, and the farmer can pay lower interest rates too. So it is trickling down, and we see across our sectors.
And when I think we look across the halls here at all of the amazing entrepreneurs and capabilities that are being brought to market, one of the things that's key to keep in mind is the role of the public sector. And whether it's data frameworks and data policy or direct action, the public sector can really shape how things evolve. And Burkhard, I thought we'd come to you next. There's a whole new landscape of new Gen AI and large language model technologies that have come into the marketplace. We see that focus and push on more efficient cross-border payments and see great innovations in business model and economics there. Against this, how do you view the role of the public sector, and in particular education and that transition? We talk about digital transformation of the economy. How do we achieve digital transformation of the individuals, businesses, families that make up that economy?
Well, in a world where personal finances are increasingly complex, financial literacy has become more critical than ever. It empowers individuals to take control of their own financial future, make wise investments. We all know how important this is, and avoid also falling into debt traps. So financially literate individuals are better equipped to manage unexpected expenses, save much better for retirement, and also navigate through complexities of the modern financial landscape. Or to put it in another way, financial education strengthens economic skills and an economic perspective, the necessary basis for self-determined mature life. And without an economically sound understanding of the economy, society, and politics, the increasingly complex economic working and living world cannot be adequately managed. Then, moreover, the structures and functions of modern, functionally differentiated society cannot be understood and reflected. This is particularly true of the activities of our business of central banks. And therefore, as a central banker represented here, the central banking community at this stage, I can also consider that financial education is really a key issue. And then I would come and make some remarks on AI, because I think this is also one of the big topics here in Singapore, but also globally at the moment. AI is definitely reshaping the world of finance in various ways, from trading algorithms to risk management systems. AI is also revolutionizing how financial institutions operate. And this brings with it various opportunities and risks, which financial education naturally has also to address. So AI can analyze individuals' financial data and provide customized recommendations for improving their financial well-being. For example, AI can here suggest strategies for reducing debt, optimizing savings, or maximizing investment returns based on an individual's unique financial situation. And of course, AI can itself also supplement financial education with data-driven insights and recommendations. But of course, it would obviously be the wrong way to completely replace the financial education and financial advice with chatbots and algorithms. So, and then you have asked, what should the public sector do? The public sector is constantly monitoring new developments, defining, of course, rules. Some of them are telling us you are redefining too many new rules. And also, at the end, we are trying to protect consumers in small and medium-sized companies in the best possible way. This year, for example, and some may know that I have been for some while a member of the European Parliament. The European Parliament adopted the first comprehensive regulation of crypto assets and currencies worldwide, so-called MiCA regulation. Last point, in addition, we are also, from the public side, investigating how we can use the AI tools in our daily work, especially in the field of banking supervision. I want to name this example in order at the end to contribute to a more stable financial system.
So a real focus on providing the rules of the road, making sure that the individuals in the economy and the included are financially literate and ready to make those decisions. Maybe if we could just keep going down the line on a speed round here of Matt, how do you see the public sector unlocking value in the economy with these new tools?
There are lots of things I could bring up, but I want to focus on what we call PPPs, public-private partnerships. We've spent a lot of the recent decades talking about the potential for this with respect to physical infrastructure, roads, bridges. As Ajay Banga reminded us today, and it's here you got a real private sector guy now in the World Bank, which is a public sector focused entity. We're going to see the next decade the potential of public-private partnerships.
He's really a great guy in the public and the private sector.
Absolutely, because we're going to see, look at the India stack. Look at other examples in other countries. Look what the Monetary Authority here is doing. Anything that the government can do to work with the private sector to make it cheaper, faster, more accurate, and also to have a good governance regime for people's data moving onto digital channels is going to open doors and to inclusion.
Wolfram, as we think about this new generation of financial infrastructure, and that's really what CBDC initiatives, data structures for the use of AI. So as we think about different spheres of innovation and what the public and private sector are doing, how do you see them working together to make sure that they complement each other and we don't end up with redundant, parallel, overlapping, wasted effort?
Yeah. Well, I think we can use that analogy of the highway. The highway is public infrastructure, it's provided by the government, but the cars are private initiatives. And I think that's a good picture, since I also personally believe that central banks have a mandate to engage where market fails. They have a mandate to set regulation, but the private sector has much more experience in driving innovation. And this is also how we should look at the digital finance frame, where and I take again the example of CBDC, Matthew, sorry for that. We could also talk about digital track and trace solutions, but let's talk about CBDC here, where this is the platform that requires private and public partnership to bring it to products and services for the consumers.
And I think one of the things that as societies we'll just have to keep working on together closely is making sure that we know that we need highways, or whether we need airports, or whether we need bridges, and just making sure that we have those good design requirement considerations worked out together, and sorting that we don't build a highway for an airplane and a port for a train. So Fernanda, as we move on to you, how do you see regulation supporting innovation in some of the areas that you've been talking about, increasing inclusion of risk solutions, safety nets in society?
Exactly, and we've seen obviously the role of the regulators in all our markets and being really aligned actually with our mission of inclusion. And in every sector, I mean, from credit and creating the infrastructure and the roads. And I remember, a few projects even with you involved, Matthew, or the IFC on the credit bureau, right? So just a very basic infrastructure that actually is a PPP, right? So private together, but creating a tremendous tool to not only help the private sector to include more and conceive credit, manage risk, right? But really creating the ecosystem for new models of banks to create. And that has happened across the emerging markets and very much supported by the regulation. More recently in InsurTech, Indonesia, OJK was not issuing any more licenses, but they issued one license for one of our entrepreneurs, Cleo, who actually is pushing financial inclusion through InsurTech, much more affordable insurance tailor-made to the ones who are most vulnerable and don't have access to insurance. So opening up a sandbox and creating a license and allowing innovation is also very important across the board and across the industries that we support.
Excellent. Well, I think that from these speakers you've heard an amazing array of the different ways that the public sector and private sector are trying to work together to address those challenges of the cost of accounts, the difficulty in reaching customers, both through the different channels, but things that are relevant for the product and service mix that they really seek and need. I think that we've heard a bit about some of the challenges that are really enduring, but also when we look at some of the new tokenization, ledger, and AI technologies, why we think and hope that we're at a breakthrough moment, and that it's really worth investing the time and effort to get the right frameworks in place so that these tools can do their job. So thank you very much to a terrific audience. We appreciate you being here with us on a Friday afternoon, and thank you to our wonderful panel.